Okay, let's get going. So welcome to this webinar on inclusive property insurance, bridging the gap to financial security. My name is Lisa Morgan, and I work at the ILO's Impact Insurance Facility. And today we have a wonderful lineup of speakers to talk to you about this topic. But before we start with that, I'm just going to say a few words about the work that we're doing on property insurance, and also just defining what we mean when we say property insurance so that we're all on the same page. And hopefully while I'm talking, more people are going to be joining. So just a bit of background, what do we mean when we talk about property insurance? So property insurance is insurance that provides financial protection against the loss of or damage to real estate and personal property, such as household contents, small business stock, etc., that can be caused by perils such as fire, theft, windstorm, hail, vandalism, etc. And what we find when we're speaking about inclusive property insurance, so here our focus is on looking at markets that are underserved or unserved by insurance, typically low-income markets. The property insurance that we like to see is actually quite absent for these populations. So, for example, for low-income renters, property owners, those who build their own homes incrementally over time, and micro, small, and medium businesses. And these we believe from the ILO side are very important because they are the engines powering economic growth in emerging and low-income markets. So what has the ILO been doing? We have been working with Habitat for Humanity, Britam, and SCBF since the last quarter of 2020. And we set up a project with Habitat for Humanity, which is a global non-profit housing organization and our development partner, and Britam, which is an insurer based in Kenya, called Developing New Property Insurance Solutions. So we set this project up and had Sarita Mohanty join us as an ILO fellow. We specifically recruited for this project, who joined in January 2021 and stayed with us for 2 years while we worked on a project to stimulate product innovation around property insurance and specifically support development of new property insurance solutions for low-income and underserved market segments in Kenya. In 2021, we joined forces with SCBF, and the project is going to continue until the first quarter of 2024. So over the last year, we've been looking at the scale up and partnerships around the products that we have developed. So just another word, why is this important to the ILO? So the ILO has a decent work agenda where we focus on productive employment and decent work, which are key elements to achieving fair globalization and poverty reduction. We believe that insurance is a very important part of this because it has both a protective and productive element to it. So protective, obviously, because it protects you against perils, and productive because it can ensure the assets of production. So our mission at the ILO's Impact Insurance Facility, for those of you who are new to us, is to enable the insurance industry, governments, and their partners to realize the potential of insurance by building quality risk management solutions at greater scale. And just a quick note, this webinar is going to be very much focused on property insurance, also with a focus on distribution partnerships, which are really key. So I just wanted to say up front, and I'll say at the end, we also have some tools at the ILO, and one of the tools that we have is a paper on how to manage partnerships. So if you are also listening to this webinar and thinking, well, these are great distribution partnerships, but I also need help on how to set it up, I really encourage you to read this paper. I'm putting a link in the chat if you are interested in doing so. But first, let me now stop sharing my screen, and I think we now great, we're on 46 participants, which is fantastic. I would like to now introduce two of our speakers who also would like to just say a few words of introduction. So first of all, we have Sarita Mohanty. As I mentioned, Sarita is very well placed to be welcoming us today because although she is now with the Swiss Capacity Building Facility, She was an ILO fellow before she joined SCBF. So a bit about Sarita. She's an insurance product specialist with over 16 years experience in product development and management. And as I said, she was our fellow until January 2023. And after the fellowship, she joined SCBF in the capacity of Communications and Operations Officer. And we'll also be hearing from Daniel Mhina, who is the Associate Director, Housing Finance for Habitat for Humanity International. So Daniel, so you know a bit about Daniel. He has more than 14 years of experience that spans across housing finance, banking, telecoms, consulting, microfinance, and the development sector. Daniel is, as I said, he is the Associate Director of Housing Finance Africa at Habitat for Humanity International, where he has been since 2021. Previously, Daniel worked as head of digital finance at FSDT Tanzania, after being an advisor in digital finance, also with FSDT. If you don't know what that stands for, it's Financial Sector Deepening Trust Tanzania. He has also worked at Finca, MFB Tanzania, Stanbic Bank Tanzania, Airtel Tanzania, Vodacom Tanzania, and Deloitte Consulting Tanzania, holding various senior positions. So with that introduction, I'm going to ask Sarita to start with a few words, and then we'll hear from Daniel. So Sarita, over to you.
Thank you, Lisa. And first of all, good morning, good afternoon, and hello to all my fellow panelists and all the participants who have taken out their precious time from their busy schedules today to be a part of this important discussion. And personally, it's a pleasure for me to be a part of this webinar, being on the other side of the table this time and getting perspective from both the sides. That Lisa mentioned, I was a fellow doing this project starting early 2021. As Lisa initial part of the webinar mentioned, that property microinsurance is often a very overlooked and less explored area. So this discussion today is very important for us, for all of us who are interested in serving the low-income segment through inclusive financial solutions. So today I'm representing SCBF. At SCBF, we blend public and private resources, both human and financial resources, to foster innovation in design and distribution of inclusive financial solutions tailored to the needs of the low-income population. And while we do not categorically or exclusively focus on insurance, but we are proud of the fact that 62% of our client outreach has been through various insurance solutions, which enables the low-income households to better manage their risks and making them more resilient. In this particular project, we have partnered with Habitat for Humanity, ILO's Impact Insurance Facility, and Britam, on our initiative related to property microinsurance in Kenya. The genesis of this project, in fact, has been a feasibility study that was done way back in 2015, and it was funded, again, co-funded by SCBF and Swiss Re at that time. And at that time also, it was a fairly new area of exploration, that is understanding the market for property microinsurance in the country. The study at that time had established that around 35% of the households or people have reported losses to their businesses or houses or homes due to theft, fire, flood, even eviction. And yet they did not have any provision to protect them against such risks. The study also highlighted another important area, that is, like many of the low-income population, they run their micro enterprises or small businesses from their place of dwellings or homes. So any damage or risk of these events on their property, on their dwellings, had a direct impact on their source of livelihoods, which made it more important to focus in this area and work towards providing some relevant solution to the segment. At the beginning of this project, when I was part of it, we also did a small study through FGDs to understand or reassess and understand the exact requirements of the segment and the market. And we also got to know some important challenges that the segment faces in terms of accessibility or understanding of property microinsurance and the areas of concern that they had before we start working on the solutions or distributing the solutions. In this study, the important aspect or the most important challenge that came across was that majority of the people were not aware of property microinsurance as a solution for them being available to protect them against these risks that we mentioned. And many of them, and some of them, whoever were even aware of property insurance or insurance in general, they mentioned that the offerings that are available in the market are very standard, and they are not really meeting the needs of this particular client segment. Secondly, the products were very complicated, not easy to understand, and the processes, be it the onboarding or the claims, were very cumbersome, which were deterring this particular segment from even, trying out or experiencing these benefits of microinsurance solutions or property microinsurance, to be particular. Hence, the requirement at the inception was to unbundle the product features, make them simpler, easier to understand, and in the process, make the processes also simpler, so that people can at least give it a try, experience the benefit, and then probably, come on their own and kind of understand how it benefits them and helps them. Also, in terms of distribution, we thought that it's better to try both conventional and unconventional or new methodologies in order to maximize the reach, because the segment is not easy for any insurer or any player to reach that easily. Today, I'm sure with our esteemed panelists who are both from all the segments, as in from the distribution side, which is the focus area for discussion, we will get a deep dive into the progress made in the project, and also what efforts are being made today to make property microinsurance affordable, accessible, and effective, which is a very key requirement. So looking forward to the discussions today. Thank you so much.
Thank you, Sarita. And it's wonderful to have that insight from you, given that you were involved from the beginning of the project. I just wanted to mention, I forgot to say this at the beginning, if you do have questions along the way, we will have time for a Q&A at the end. So please put your questions into the Q&A section at the bottom of your screen. So now let's hear from Habitat for Humanity. Daniel, would you like to say a few words?
Thanks, Lisa. Ladies and gentlemen, good morning, good afternoon, good evening from where you're dialing in. My name is Daniel Mhina. I'm the Associate Director, Housing Finance, working with Habitat for Humanity International, Terwilliger Center for Innovation in Shelter. I'm happy to be part of this webinar today, together with our partners who invested in the project to really drive innovation in the inclusive property insurance space. So Habitat, being a non-profit organization with a vision of everyone having a decent place to live, we saw an opportunity in bridging the gap in terms of available inclusive property insurance solutions, particularly addressing the low to mid-income households, as my colleague Liza mentioned. But then picking up from Sarita's introduction, the project we're about to share has really helped to drive innovation in the inclusive property insurance space. But the journey was really exciting in terms of the process of continuous reiterations that we had to go through the human-centric design to come up with the right fit solutions for the market, but also addressing the challenges of access, as Sarita mentioned, in terms of how do the low income and mid people access those solutions that we are trying to build. And hence working on building the distribution network through implementing partners who will be sharing their experiences today. Was really enjoyable. Hence, I'm looking forward to be sharing today the strategies, innovations, best practices, and the lessons we've learned through this journey in delivering such innovative property microinsurance solutions in Kenya, and particularly the distribution approaches that have really enabled access of majority of the low and mid-income Kenyans to access the insurance. So without taking much time, let me pass it back to Liza to continue with the moderation, and happy to continue responding if there are any questions, but I hope you guys will enjoy the webinar today. Thank you very much, and over to you, Liza.
Great. Thank you so much, Daniel, for those words. So now let's turn to our other panelists. I want to introduce the three other speakers. So if you'll bear with me while I tell you about them before we get into the meat of the presentation. First up, we will have Liza Maru from Britam. Now, Liza is currently heads the Emerging Consumer Innovation Department at Britam. And she is passionate about promoting inclusive insurance by creating relevant products for those uninsured and underinsured. She is a well-rounded actuarial professional with a decade of experience in the Kenyan insurance industry and the specialized skill to develop insurance products that tackle the varied challenges in the insurance industry. She's also, in her actuarial professional experience, has done pricing, reserving, capital modeling, and formulating business strategy. And I've actually been working very closely, as has Daniel, with Liza over the last year to pick up from where Sarita and the team left off at the beginning of the year. So Liza's going to take us through just a bit more about the project and where things are today. Then, as we mentioned, the focus is very much also on distribution, which we know is a key element of success. So, you know, I'm sure many of you have heard the saying, distribution is king. So in that sense, we have invited Bente Krogmann from mTek and Kebaara from Safaricom to tell us a bit about how they fit into the picture with distribution around these products. So let me introduce Bente now as well. So Bente Krogmann is the CEO of mTek Services. She joined mTek in 2019 with the mission of breaking, the 3% barrier of insurance penetration through digital transformation. Her innovation has revolutionized customer experience and eliminated the laborious insurance paperwork through an elaborate Know Your Customer framework. She's been instrumental in the ongoing transformation of the insurance industry through transparent and integrated processes, and through her work has reached 65,000 Kenyans. Prior to mTek, Bente clearly has a strong entrepreneurial spirit, having built her reputation as a project manager, which saw her start Extreme Clean car wash franchise in partnership with Vivo Energy. So that's Bente. And then we will hear from Kebaara, who's the project manager of insurance at Safaricom. So Kevin is a seasoned insurance professional with 15 years of experience in product design and distribution in leading insurance companies and digital solution providers. So as the project manager of insurance at Safaricom, he spearheaded initiatives that drive digitization in the insurance industry. He is also passionate about changing the culture of insurance by making insurance solutions simple, relevant, and accessible to all. So Liza, let me first hand over to you from Britam. Okay.
Okay, thank you. Yeah. Thank you, Liza. So I'll just, you can just enable me to share my screen.
Okay. Give me a second. I thought I'd made you a co-host.
Okay, even as we wait for that, thank you. So as we talk about what we've done at Britam, I'd like to say hi to everyone and pleasure to meet you all. I hope we find this very insightful as we take you how we rolled out and scaled out property insurance from a Britam perspective. So briefly about Britam. So we are a leading diversified financial service company that cuts across 7 countries in the East African region, namely Kenya, Uganda, Tanzania, Rwanda, South Sudan, and Mozambique and Malawi. So although this product was actually and project was actually being done in Kenya, we see an opportunity to scale it across the regions that we currently operate in. And just to start from our why, based on Sarita's sentiments, I think there was a research that was conducted in July 2021 among 77 participants. And what we did realize that we Kenyans face a significant property risk, but we tend to underestimate the impact of the risk, particularly low-income households. mostly as a result of low trust of insurance, as well as limited experience with insurance products, and most of the time, an awareness of the existence of such products. So as a result, most households would feel that the housing asset risks could be mitigated without insurance, either through alternative mechanisms, but their main concern was on their business property, which would include equipment, as well as any other items that they're using to conduct businesses. And in turn, you'd find that most of the businesses was actually operating out of home, or they would have to pay rent for their property. So based on the research that we conducted, we did find that most of them felt that in terms of frequency, the most risk that they faced was in sickness, followed by theft, and then things like fire and weather-related damages came in last. When it came to severity, most of them felt that it was costs as a result of sickness of a family member or themselves, then followed by weather-related damages, and then theft. And majority cited that they'd never experienced any loss as a result of fire or flood or theft. But for those who did experience it, the severity was quite high, because it either led to the closure of their businesses or displacement from where they were staying. Majority of the businesses were being run outside of their homes and rented premises, which meant that both their personal belongings as well as their business inventory and stock was in jeopardy. And how they were dealing with the losses is either through the business proceeds, so the savings that they made from the business, borrowing from friends, and majority were members of SACCO, that is 51%. So they were able to get some loans from the savings that they had with the SACCO. And when we talked to them about insurance, 31% only said that they would be willing to purchase insurance. 61% said maybe, and most of them were not sure about insurance, mostly because they said that they don't understand how insurance works. They didn't see it as affordable, mostly as lack of awareness. And they also were really keen on having their claims being paid in time. Some additional insights that we gathered was that 78%, those of who were staying in Nairobi, actually were staying in rented properties. So their main concern was not on the house itself, but on the personal belongings. And for the micro entrepreneurs and small businesses, they had some alternative coping mechanisms. So you'd find they'd either have guards, or they'd have grills on their doors and their windows, or CCTV that they'd be using to safeguard the risks against theft, and as well as fire. Some businesses' risks that they mentioned were items like perishability of their goods, as well as machinery damages that could occur as a result of power surges or power outages. And finally, especially in the low-income settlement, you'd find most of them would be facing eviction, either due to city council policy changes, or even as a result of fires. So as Britam, what we did under the project team is that we looked at the insights from the study, and we used that to develop a product. So we looked at the insurability of most of the risks that they mentioned, which included sickness, death, accidents, theft, fire, natural calamities. Some of them mentioned weddings as a very high cost, business losses, and things like riots and eviction. And we saw what could be insured and what could not be insured. And initially, we started to develop a standalone property cover. And this standalone property cover had bits of different risks, which included fire, burglary, a bit of hospital cash, personal accident, as well as an embedded terrorism cover. When we had this standalone property, which was developed through human-centered design approach, we engaged our conventional distribution channels, which was tied agents as well as brokers, and of course banks and MFIs to distribute this product. As a result, we had some challenges in the scale-up of the product. Mostly, due to affordability. So you'd find that most of the households had very minimal disposable income, especially knowing that Kenya slumped into recession in 2020. There's also very low awareness and negative perception towards insurance, and particularly property insurance, which is not always a priority risk. So you'd have to find that the amount of time you'd have to convince a customer to purchase a product would be quite lengthy, which increased the acquisition cost on Britam side. When we were working with MFIs and banks, trying to embed this product into the loans that they had, the challenge we had was that you'd find that this increases the cost of credit, which in turn was not favorable to banks and MFIs. Therefore, this was quite difficult to do, to embed the property insurance in credit-linked policies. And as you can see, the Thin Access study in 2021 really showed the main challenges in this segment, which was that they would be willing to buy the product, but they could not afford it. And most of them had little or no knowledge of insurance. Some challenges as well was that we did discover that those that needed the property insurance the most could not have it. And just case in point, Kebaara, which is always prone to having fires, mostly as a result of arson or other political reasons. And so it did not fall into the product terms and conditions. And as well as property insurance is not a priority. As you can see from the research study, we saw that 95% actually felt that health insurance was the most relevant risk insurance compared to any other form. When we tried to sell the product through the retail channels, either through banks or intermediaries, we did discover that the conversion rate was quite low, mostly being related to the priority bit. It was easier selling a health insurance product compared to a property insurance. And finally, because we were serving very multiple segments within the Britam microinsurance, that is millennials, MSME, informal workers, farmers, and emerging businesses, we did discover that that standalone property did not suit all the kind of customers that we had. So the one size did not fit all. So we had to make some changes, and so that led to a number of interventions in the product. And as Daniel has mentioned, we saw how these products really metamorphosized through the 2-year project. So initially, we had the standalone property cover, which we rolled out in Jan 2022 to our retail channels, as well as to the banks and MFIs. However, in 2022 June, we did develop a new product that was embedded in our existing customer as a rider feature. And this was combining a fire cash cover with an existing product. It was a group health as well as the funeral covers. So that's to increase the penetration of this product, but at the same time demonstrate to our customers the value of a property insurance. And so this would lead to them actually having, choosing or upselling to the standalone product. In September 2023, through a partnership with mTek, and mTek was able to introduce us to multiple aggregators, we were able to roll out content insurance, which was focusing on device and personal belongings, as well as distributing the property insurance cover to informal retailers in the FMCG space. In October 2023, we rolled out, although it's not within the scope of this project, we rolled out a flood insurance product that was targeting low-income households, mostly to be able to cater for the displacement as a result of damage to their property. And so this is an ongoing project. And finally, in December 2023, we are rolling out a product with Safaricom, where we have a pay-as-you-go travel cover, which would include also some coverage for personal belongings for our customers as they are traveling during the Christmas period or whatever other travels that they're having during the season. with that, we can see how much impact we had on in terms of numbers. Initially, with the opt-in cover, although the acquisition rate was quite high, we didn't see much of traction until we were able to pilot the embed solution in June 2022. And so we saw a rise in the number of customers having an inclusive insurance property cover. And so after the completion of the pilot was around roughly 5 to 6 months, we chose to scale this solution as we had seen how much impact it had across our clientele. And you can see how that rose up till the current numbers at 56,000. In August, through partnership with mTek, then we were able to roll out the content insurance, which now enables us to have a bit more unbundled products that is focused on different property devices. So whether it is a tech device, or if it's a personal belonging for different customers. So when we look at the impact, we have reached 56,000 lives, of which 26,000 of them are women, 28,000 below the age of 35, as we were very categorical on focusing on youth, and 7,000 in the rural areas. So this is members who are outside of the Nairobi region. And we've only been able to do that through partnership with mTek, Safaricom, as well as kiosks. So just in conclusion, before I let Bente and Kevin come in, I think for us, one critical item has been co-creation with our partners has been very critical, because we've been able to have various products that is focused on these segments that our partners are actually targeting. Insurable moments, being able to know when to cover, especially when you're looking at accessibility and affordability of inclusive property insurance. We need to be able to have bite-sized covers that is accessible and affordable to our customers. And then creating long-term partnership and sustainable partnerships with insurtechs as well as telcos, which has now enabled the reach and scale that we have currently. And finally, product bundling and product unbundling. So being able to pick out what is a relevant property risk for the various segments, and then embedding that to the different channels and products that we currently have. So I think that is an end to my insights. I'd like to take it back to Liza.
Brilliant. Thank you so much, Liza. That was a really fantastic summary of what's been going on over the last couple of years, and just incredible that, you know, we've managed to hit nearly 60,000 policyholders with this product. So thank you very much for sharing. Now let's turn to hear more from mTek. So Bente, I am going to invite you to present, and I have your slides. So if you give me a minute, I will share your screen. Well, share my screen so you can present your slides.
Fantastic. Thank you, Liza. And yeah, first of all, thank you everybody for having me today, or having mTek today. Yeah, it's a pleasure to introduce especially one project we have done together, of many we are doing together with Britam in the Kenyan market at the moment and beyond. So yeah, again, thank you for giving us your time. So as a small introduction about mTek, not so long, we are always talking about the North Star, protecting people one tap at a time. And I think this is also really where we are aligned with everybody here on the call. The big question for us as an insurtech in the East African region is really, what can we do from a tech perspective to reach that North Star? And when we're speaking about the North Star, it's protecting people one tap at a time, but it's also not just protecting the people, but it's protecting their lives. And the lives are inclusive of their properties and other things. So Liza, if you can just move to the next slide. So mTek is a path in the East African region. So we are having projects, we are based in Nairobi, but we are having projects in Tanzania and Rwanda, in Uganda, in Ethiopia and beyond. But today we're going to talk about distribution And when we are really seeing distribution from the perspective of technology, we believe in that three things are very essential to distribution. And number one is integrations, number two is aggregation, and number three is data. I sometimes believe that probably the word data, and we heard about a lot of data from the two Lizas on this call, is there's a lot still we can do in terms of primary and secondary data sets, and this is where we want to support. As an InsurTech, how can we use data? And Liza just said it again, and we need to get to people at the right time with the right product and with the right channels. So while we are using data, we are using three go-to-market channels. And in Kenya, we're having a comprehensive retail marketplace. And again, we are a PaaS, a platform as a service, where different distribution partner, insurance agents, insurance lead generators, we're calling them collectives, and affinity partners can come on board, manage sell insurance policies and manage them end-to-end paperless with direct integration to the underwriters. Number two, and this is a project I'm just going to talk about shortly, is we are providing API-enabled embedded solutions with affinity partnerships. And yeah, Liza, Maru, I'm going to say the second name now also a lot of times, because obviously we're having two Lizas here. We are very happy that we are your tech partner of choice when it comes to embedded solutions. Just this morning, and I know we're talking about property today, but we had also a project on EVs with Britam. So we are really looking after different affinity embedded solutions because we see a big trend going there. While we as mTek are the technology partner, meaning creating the connectivity, and obviously Britam is the product owner in terms of the product development. And then last but not least, we're also doing SaaS and value-added services for the insurance ecosystem. Obviously, we are praising ourselves by being a PaaS, so we never are planning to replace anybody, but to empower people with technology, obviously also underwriters, banks, and telcos. That's a little bit about the distribution landscape of our PaaS, and I only have 5 minutes today, so I have to run through it a little bit. But Liza, you said earlier, distribution is king. I would like to say distribution is queen. We have so many women talking today. So this is really our distribution roadmap in terms of a marketplace for the smaller players, embedded solutions, which we're already seeing as a big trend to get to the right persona at the right time in South Africa. East Africa from the number still has to do some catch up to do on that one. And then last but not least, using our technologies to empower the whole ecosystem, especially underwriters and banks. We can move to the next slide. Now, what did we do with Britam? Yeah, and like I mentioned, we're doing many projects with Britam, but we are talking about one or two in specific today. And the most recent one was a project where we collaborated as a triangle with obviously Britam as the product owner. They gave us an amazing product in terms of domestic, which was covering fire, burglary, and business interruption due to fire. So Britam as the product owner, Kiosk, and unfortunately they're not on this call today, as an affinity partner, giving us access to the SMEs. Kiosk is a marketplace for SMEs, and we got access to 100,000 SMEs due to that partnership. And then obviously mTek as a technology provider, connecting Britam on the one side, Kiosk on the other side, and then to the end SME. So an end-to-end paperless solution 24/7 in the whole of Kenya. That connectivity we were able to achieve. And I really would like to point out one thing, that connectivity is not just important at the time of purchase, it is equally important also at the times of claim, right? That we are ensuring that 24/7 again in all the corners of Kenya and also partially beyond. I want to point out one thing here. We also came in as an insurance broker on this business. Some of our affinity partners are not regulated, so we're also bridging that together with Britam in order to create also the right regulatory framework. again, what did we distribute to kiosk SMEs? That was the fire, burglary, and business interruption. And it really, what our learning out of that was, what it needs to be seamless. It needs to be super easy to purchase for them. Yeah, very little KYC, which is still aligned with, like I said, regulatory framework. How did we achieve that? Through database integration, where we were able to pull certain KYC factors verified from available databases in the country. And then also on their phones, they didn't need a laptop. We're also working on a USSD version of the same, so we don't even need internet connectivity, which is a great solution, again, for the last mile delivery. And again, I really am going to repeat that like 10 times today, not just at the time of purchase, but even more important at the time of claims. I don't want to say issues, right? But in the insurance, in the business of protection, we are really gaining the trust. And we know that one big challenge of the industry is trust when we are performing at the time of need. And again, this is at the time of claim. So we distributed that to kiosk. What was in it for kiosk? Obviously, they are depending on their SMEs, right? Their business is only running when the SMEs are also running. But so there was a big interest on that side. But on top of it, was also a social responsibility, right? We believe that protection, and like I believe everybody on this call, is the base of any welfare pyramid, right? And we were able to achieve that again in that triangle partnership, for the lack of a better word, again with Britam as the product owner, Kiosk as the affinity partner, and mTek really connecting the ecosystem and also integrating certain functions like databases and so on, communication channels through technology and empowered by technology. Couple of remarks. I already mentioned it's end-to-end 24/7 into the last corner of Kenya, and that is really something we are proud of. The policy was embedded in our partners' infrastructure. We were live within, I believe, 3 weeks, which I think was also is also essential. One has to be quick. We were able with Britam to provide payment terms or short, that the users could pay for a quarter, I believe even monthly, which is really targeting the challenge of affordability. And then we also bundled the product, and I think that's another big opportunity with PA and medical covers, because we want to protect the income, but we also want to protect the people and their families. Their shops are not going to run without the people. That's just a fact. So I think the bundling and also understanding the shop owners was a big success as well. Liza already mentioned how many people we have reached, and this is directly contributing to our North Star as mTek being a platform as a service, a digital, the digital handhold of the insurance industry here in the region. And again, thank you to Liza, Sorab, and the whole team around it to trust us with that project. And we're having other projects, like I just mentioned. We're having the gadget insurance, where we are doing standalone gadget insurance, because we believe that gadgets are also empowering the ecosystem and allow people to continue working. And we're working on many more projects. And I think as an insurtech, distribution is clean, data is clean, and aggregation and integration is clean. And with that, thank you very much, Liza. I was a little bit longer than the 5 minutes, but I'm open to any questions which might come. And we have some impressions of the system of kiosk, but I'm also very happy to share the presentation. Thank you.
Wonderful. Thank you so much, Bente. Do you want to go through these other slides now, or are you going to keep them in case?
No, these were just impressions about the ecosystem, okay. And this can be shared to the attendants with.
Okay. All right. Excellent. Thank you so much, Bente. That was super interesting. So again, just if any of you have questions, don't forget there is a Q&A at the bottom of your screen. Please type them in. So now let's turn to Kevin from Safaricom. who's also going to tell us a bit about his experiences. So again, just for those of you who might have joined and missed my introduction of Kevin, Kevin is the project manager of insurance at Safaricom. So Kevin, over to you.
Thank you very much, Lisa. Thank you very much. And I'm happy to be here with the rest of the panelists. I may sound like a broken record. I think Bente has covered a lot of, I think we have a lot of shared vision in terms of how we see insurance, especially when it comes to claims. Just to correct Lisa, I'm the product owner, project manager. I sound more bigger, but I'm just a product owner. And I've had a lot of my experience from the insurance industry, being an underwriter, transitioning into a telco, and there's been a lot of learning and unlearning in terms of how we approach solutions, how we approach product design. And so that has been a very interesting journey for me, having been here for a year. And I'm happy to just share just the experience that I've had and where we are going, especially when it comes to property insurance, with a focus more on device insurance. I think device being a very low-hanging fruit and a project that we're currently running with. Just briefly, because we have cosmopolitan audience, just a brief about Safaricom. We are now 23, 24 years old, with our purpose being to transform lives, and that is what we live by, with about 40 million customers in Kenya, with a 64% market share when it comes to voice. Critically, as we evolve as a company, moving away from a telco to a techno by the year 2025, it's very critical that we then enable our customers to have access to digital or have the capability to access digital services. So in terms of what we've been able to achieve through M-Pesa, I think M-Pesa is one of the biggest success stories from a Kenyan perspective, having been, this is the 17th year in existence. You can see what we've been able to achieve in terms of financial inclusion since we launched in 2007, where it was in the 26% region to now close to 80%. And this financial inclusion has predominantly been driven through what we call credit. And now we are also now morphing into now more financial services. That's wealth and insurance. So wealth and insurance are now taking a bigger focus as we transition our business more in terms of strengthening our customers in terms of financial inclusion. And we do believe the next frontiers lie there. So savings, wealth, insurance is the next frontier. So I think the biggest, and this is the learning I've had, is just trying to understand, because there's a mismatch, or there's a lot of learning in terms of digital distribution and what we currently have. There's still a lot of customers, let's say existing customers, or they still need that person-to-person touch, and we are slowly trying to then move them to more digital sales. So that's one of my key deliverables, and I think with device, I do see it as one of the most critical areas that you can start with, so that people who have never experienced insurance or have no incline towards it can access it and then experience it. And if once they claim and experience it, you can then now upsell other products because they have had an experience of a good experience, and that's very critical. And again, just touching on what Bente was saying, it's not about the acquisition, it's about now the servicing, and that's the most critical bit about it. And so ideally, this is our ecosystem. I think credit, payments has really driven our business, but now we are moving towards wealth, insurance as the next frontiers. So briefly, today I'll just be touching on device insurance, and just as a brief, what embedded is. I think I'm preaching to the converted, but I guess the most important thing is just having it as frictionless as possible. I'm a firm believer when it comes to micro products. They have to be embedded. If it's an opt-in, it's unlikely to make sense for the partners, it's unlikely to make sense for the customers. So and that has been my rallying call to the business, is to ensure that whatever we do push out from a micro perspective, especially when it comes to this property or device insurance, it has to be embedded, it has to be mandatory as a value add in terms of as an additional service that we offer. So briefly, again, this just talks about what you're trying to do. This is a build we have. We envision it as a mini app in terms of how the customer would then interact with the insurer. So ideally, it would give you a brief of what you're covered, what you're covered against, how to claim, etc., making it very easy. Because our bigger strategy is to move our customers away from the feature phones, the more 4G devices. I think for the Kenyans who are in the call, it's also one of the most critical drivers for our government, whereby more and more government services are being offered digitally. So the government is really pushing to digitize all their services. Something we call the citizen, where you're able to access all government services, is on overdrive, and we should be able to access all government services through digital means. So there lies the biggest opportunity. I was looking at some statistics that were telling me that we have about 62 million mobile devices in Kenya. 32 are pretty, the feature phones are the 2G devices, with 30 million being smartphones. So there's this 32 million gap that we need to bridge. And as a company, that's what we're trying to do. So with partnership with government and fiber, we are locally assembling devices in Kenya. And what is very critical is to have them at an affordable price. And even as we give them or we offer them to our customers, whether through cash or through credit sales, they have to have an element of protection, because one of the most critical things is that we want, once you're in the digital space, in case a risk crystallizes, whether that is theft or whether that's damage, screen replacement, we still have you on the 4G device. I think that's usually where a lot of churn happens, just from experience, whereby I have this smartphone, it's stolen, I just go back to my older 2G device, and it just beats our purpose, even as in the bigger dream of where the company is going. So I'll just quickly just talk about the risk we are looking to cover. That's damage, that's very important, and theft and loss. Theft and also loss of life. So loss of life for credit sales, we'd have an element of a small credit life cover to just cover the financier in case the person who's financed passes on. So what is again very critical, and this is based on the directive we had with these locally assembled devices, they have to be cost effective, affordable. So even the insurance that we would embed, this is through partnerships with key players like Britam. It has to be very affordable. Yeah. It has to be in the region of a screen protector. And the value proposition for the underwriter is that we are then opening it up to, or giving them a very big base. Again, as I had earlier mentioned, if we build this as an opt-in, it will not work. It has to be an embedded mandatory cover that comes as a value addition, similar to how you get your warranty. And I think critically, and this is because the acquisition may not be the biggest problem. The biggest problem is now the claims. We need our customers, or we need our customers to have the best experience, especially if they're experiencing their first claim. So when you come and you have all these TNCs, it never works. You have excess, you have all these other things. It will beat the purpose of what you're trying to drive. And the other thing is, we have to change the narrative of claims. So claims have to, if it's a simple claim like a screen replacement, these are things that we will be able to do within, as the customer waits. So that then their experience of insurance is very different. I think what we've had in the past is there's a lot of mistrust, and I think Liza touched on it from the survey that Britam did, and that has been one of the key deterrents of insurance really scaling, especially from a Kenyan perspective. So the experience has to be very different in terms of the claims. So whether it's theft, if you have the requisite documents, make it very easy. Just bring a police abstract, we check against whether you're blacklisted as a customer, see whether there's any activity in the network, and within if everything checks out through an integration with the underwriter, they can then give the go ahead to replace the device. And critically, also what we're trying to do is in conjunction with Google, we'll be able to then blacklist or like really blacklist that phone, just to also minimize the amount of fraud that may happen. So I had mentioned on credit life, just covered the individual in case of death for the outstanding loan amount. Again, so for repair claims, similar within 24 to 36 hours. That's what we would want, or what we envision. This is just based on surveys we did with our customers. So from the point where you come and launch a claim based on damage, there are certain deities, and this can only be achieved through technology. Having a platform that has this capability to then and having the right partners who can then stick to these deities, so that then our customers now, once we first introduce them to device, because devices are very important from a Kenyan perspective. I think most of us cannot live with our phones nowadays. We can then upsell other products more easily, because when we get this right, it's now easier now to upsell and tell them about other propositions. Now, things around your hospital cash, things about your other contents in the house, it becomes a very simple and easier conversation. So yeah, I would like to wrap it up there. I think as a parting shot, for me, I really look forward to us as an industry or collaborating and giving relevant and easy to understand affordable products to all our masses. So thank you for listening.
Thanks so much, Kevin. That was really interesting and very insightful. Thank you so much for sharing. So now we actually have quite a good chunk of time for discussion. So what we were hoping is that all of you who are listening in have some questions. So please feel free to type them into the Q&A. And I also have some questions for our panelists. So if everyone can just turn on your camera. But I think while we have the last presentation fresh in our mind, I'm just going to ask Kevin the two questions that have come up in the chat that haven't been answered. So Kevin, if you can just clarify, the cover is for both theft and credit life together, correct? Or is it separate? Oh, you're on mute.
Sorry. So for cash sales, so if you come into the shop and buy the phone, we just give you the device cover. So that's theft and damage. So, but we also have a program whereby we can issue you the phone and then you pay slowly over a 365 period. So every day you put in a small amount that caters for repayment of the loan and data, right? So for those sort of clientele, we then have extended a credit life cover just to cover the financier in case the person passes on. We are able to then reimburse the financier. Yeah.
Okay, brilliant. And one other question for you. So Abdur Rashid Babalola says, Kevin, thank you for your presentation. Kindly shed some light on how you plan to de-risk fraud, and please shed more light on terms like invisible enablers, as well as hook and glue for a brand super app. I don't know if is that question clear? Are you using a credit bureau and sharing information across all stakeholder platforms?
Yeah, and I think that's something Bente also touched on. Data is very key. So what is very critical for especially risks of theft, one of the things that we are trying to manage that risk is making it mandatory for everyone who's buying a phone these specific phones to have insurance. So you have a bigger base and you reduce your anti-selection risk. But as well as our platform has a capability to, and I think from my slides you could see, within the next 14 days, we'll be doing a check in our network to see whether the phone is back on the network, right? Just to confirm that it was an actual theft, and where we have flagged that the phone is still there, we then flag the customer, and we can then do follow-up in terms of in terms of the legal part of it. In terms of, again, mitigating the fraud, in partnership with Google, this is coming up in the next year. Remember, I think I saw a statistic about 90% of our phones are Android enabled, and also these devices that we are assembling will be Android enabled. So we will have the capability to actually turn them off totally. So even if the phone is sold to the black market, etc., it will be a phone that is not usable at all, right? So if you do not have Play Store, you will not be able to use the phone. So those are some of the ways we are seeing in terms of mitigating that risk. The second question on super app and stickiness. So the thinking about it is, if we're able to offer some of this, so we have come from a place where we are a telco, where we would offer just a service. So I just sell you the phone, right? But then if you want the insurance, you have to go to Britam. So that's a different leg of the customer journey. But if you're able to then give you one holistic solution, right? That gives you the primary product with a service that is important and you can use, you're less likely to then churn out of the network, because if some of these risks do crystallize, your experience will be, they will not even, sorry, Liza, let me just say this. They will not say Britam did this, right? They'll say, wow, Safaricom. So you build this perception, and you're able to then position yourself as a brand that, as I said, transforming lives literally. So because when we really go to the ground, a lot of people have very little understanding of insurance. Actually, the perception of insurance is for the rich. Those guys never pay claims. So if by just bringing this additional feature, we can then create another, or we can bring brand satisfaction through just embedding a small insurance, property insurance, device insurance on our primary product. Yeah.
Great, thank you, Kevin. So I'm actually going to follow on from that and open up a question to all of you. Well, maybe not all of you. So Bente, Liza, and Kevin. So consumer education is really important. I mean, we're dealing with a population of people that are not so familiar with insurance. So where do you see your respective roles in educating the consumer about the insurance that you have? And specifically around the property insurance products that we're talking about. So who would like to go first? Maybe, should we start with Liza and then move on to the other two?
Yeah, so maybe I can start from my end. I think for us, what's critical is the channel which the consumers are going to be buying from, or who they'll be buying from. So working closely with intermediaries, first of all, to relay that information about the property, because the first person that you need to convince that the insurance is relevant is the intermediary. Then once you do that, then they become your champions in the market, where they're able to educate the customers and inform them of the pros and cons of having that property insurance. What we've also found quite effective is, especially on our embedded solution, is member education. So we normally have regular member education where, for instance, if it's a health cover, we're able to go and talk to the customers about various health items, of which case we also bring in the bit of property insurance and talk about the embed solution that we currently have. So the customers are now more aware about the products and are, in case they're having any claims, they are aware that they're covered to some extent. I think finally is FAQs. FAQs come in very handy, especially for digital channels. for instance, for the products that we currently have with Safaricom and the one we're planning to roll out, I think the first point is the customer should always be able to have access to some FAQ so that they can educate themselves before they're able to now escalate any items which would not be handled from their end. Yeah, I think that's the approach we would use.
Great. Thanks, Liza. What about Bente and Kevin? How do you see your role in the consumer education piece?
Kevin, should I go first? I mean, when we're always speaking, and I'm going to take you one step back on that, Liza, when we're talking about consumer education, it's actually part of increasing penetration, right? When we are looking at the one pillar, what is going to take us to increase in insurance penetration? And I actually saw one question which is gearing towards that. The other part is obviously distribution channels, a review of products, and then obviously also good behavior of the industry as a total. What are we doing on consumer education? I think it's awareness campaigns, and I am making it my nearly primary duty as mTek to ensure that people understand what they are buying. Yeah, because that is usually creating the most confusion. And I think everybody on this call had this experience. I just renewed my medical, and it took me really time, and I'm from the industry, to understand what I'm really covered for and how can I claim to that. And alone this fact is disturbing to me, because if we are especially selling micro products, we need to make it. I'm always saying to Liza and the team, if I cannot understand your product within 30 seconds, you don't have a product I'm interested in distributing, right? Because if I'm not understanding it, how do we expect our end user to understand it? So I'm really pushing the underwriter to provide products which are easy to understand. This is your coverage. This is what you are covered for, and this is how you can claim. If we don't manage that as an industry, we have failed. And at the moment, Liza, unfortunately, we are still failing based on the insurance penetration we are having. That's just a fact. Initiatives like this are really helping us to grow, but currently we are still failing. And we are all trying to figure it out, how we can get better products, better distribution channels. We need to get, especially in the micro insurance space, to be able to buy a product or renew a product as easy as buying a Netflix account, I'm always saying. Otherwise, again, we don't have a chance. We need to behave proper as an industry. Sometimes I'm being asked, especially by my investors, Bente, there's regulation, and I think one of my investors is on this call, and there's regulation. Are you not scared of regulation? I think regulation is great, right? Especially in an industry which is having a trust issue. And I think we are not here to tell us what we want to hear, but we are here to discuss challenges. I think regulation is supposed to keep all of us on track for the ultimate benefit of the end user. So it's really these three channels, and education is one of them, but we can only educate, especially on the microinsurance part, if we're getting products which are easy to educate, because otherwise, where am I going to start? Right? And I'm not going to ask you, Liza, how long it took you to understand your medical product. And I know we're not talking about medical, but it is really a red line across all products. Kevin, when you bought your last motor insurance, how long did it take you? I mean, but again, we have embarked on the journey. I'm always saying the train has left the station, right, to sort out these pillars, which will ultimately bring us to a better penetration rate. And I think everybody on this call has joined the train, otherwise we wouldn't be here, yeah? So, but I think it all kind of goes together in education. Specific things we do webinars, we go to the ground with our partners. I think always we have at mTek on our marketplace, I think we have around 8,000 agents, and we are not Safaricom, but we're working with Safaricom to really bring the word out there, right? And I'm telling you, it is really the most enjoyable moment when we are really also succeeding in that and getting people into that protection under that protection umbrella where it also really works, not just on paper. And I think Britam does an amazing job on that, to also stick by their word in terms of ensuring what they're ensuring, and we help to communicate that. Only digital, I don't think it works. We need to use technology to empower the ecosystem, but we have to be on the ground. And yeah, Liza, next time you're in Kenya, please join us on one of our field visits, because it is very and I think Liza and Kevin, it's very rewarding. Yeah. So that's my.
So Bente, I think maybe just for the benefit of those on the call who are not from Kenya, you mentioned kiosk. So I think maybe just tell us a bit about, again, like who kiosk are and how you, maybe how you do that interaction with them. Just first tell us again what kiosk is, and then how you interact with them to make sure that they know what this insurance is about.
Yeah, so kiosk is very similar to Jumia, Copia, etc. So they're having their marketplace, a B2B2C marketplace, to cut it short, and their B2B, it's really small kiosks. Like Kevin, also from Safaricom, we're having a lot of overlaps where the kiosks who are actually selling products like sugar, flour, mostly
so corner
food.
stores, essentially.
It's very small stores, really 1 square meter, where they are selling items, and kiosk per se is connecting these small stores to vendors for the different products, right? So like I mentioned before, kiosk has an interest to protect their kiosks, the small kiosks, because this is their lifeline of business. They are getting a commission of the purchases being done. But then secondly, why they're also doing it, obviously they want their network to be protected also from a social responsibility factor, and this is why they embarked on this journey. I must say, though, it's very driven by business, and I think it needs to be driven by business. So for them, it's protecting of their lifeline, because if a kiosk burns down, or if you're having floods at the moment, I mean, floods are not being covered, but there is a flood insurance. I know Liza has a flood insurance. But if the kiosks are not covered and have to close down, there's no business for kiosk ultimately, right? So that is the whole purpose behind it. What are we doing? We are really connecting all the ecosystem players, and we have really contributed, I think, also to make the journey for the individual kiosk more simple. If you are asking somebody for a 300 shilling policy, which is around $2, I think, at the moment, or 220 roughly, and you are asking the person, can you give us your KRA PIN? It's a hard shot. We are back to the point of it needs to be as simple, especially on the microinsurance part, as buying your Netflix account. Understanding it's a regulated product. Yeah, so it's a dance. I'm always saying to Liza and her colleague Saurabh, it's a dance on the line. Yeah, how simple can we make it? Still regulatory compliant. So it's a tough one, but we have good brains on the table who can sort that. But that is what we are doing with kiosk. Yes.
Okay, brilliant. Thanks, Bente. So I think in the interest of time, I'm just going to move on to some of the other questions. I see my colleagues are furiously typing away in the Q&A. So thank you for answering some of the questions. But I just wanted to jump in on the question from Kezia, who says there's a hypothesis that insurance penetration will increase if there's more voluntary purchase than mandatory purchases. And then what are the different stakeholders doing the drive to drive voluntary purchases? So I just want to reflect a little bit on our experience that making things mandatory is really important, I think, to sensitize people, because our experience of making things voluntary, where you're dealing with a market that hasn't really experienced property insurance, is very difficult, and we haven't experienced vast numbers through that voluntary purchase. I think once the market becomes more educated to the products, then the voluntary will take off. But at the beginning, letting people try it through making it embedded, it seems to be the what is working, and the only thing that's really working. So I just wanted to jump in there. I think some of the other questions have been answered. So I'm going to go over to Bert's question. Hi, Bert. So this is a question for Kevin. So this is from Kevin Optebeek, who's from the Microinsurance Master. He says, I'm pleased to hear about the embedded insurance opportunity. Is this the go-to strategy for Safaricom M-Pesa for insurance, or is it mostly geared towards getting standalone insurance products on your super app?
Yeah, hi Bart, nice to see you on the call. So from the learnings you're getting, especially again, going back to what I said earlier, for your micro products, and also from other players who've been in that space, so your Truckos, Britams, etc. When it comes to micro, embedding works best, I think, for all partners. So, and just touching to what Lisa was talking about, especially in the initial stages. But then for your traditional sort of insurances, so your motor, your sort of standard medical, you're still partnering with like-minded organizations and offering them as mini apps on the super app, so that and all these are just partnerships. So just to make it clear, we do not have a license. So we do partner with like-minded organizations for the different categories of insurance. But for micro, and that's something that I'm very passionate about. I think one of the key things is how can we then embed it, and us having that advantage of numbers. It's for me now to push the case internally, so that then the business can see the advantage of having this as a value add, and then all the partners then benefit from the clients, underwriters, the distributor, etc. Yeah.
Great, thank you, Kevin. So our next question and comment comes from Azza. So hi, Azza, nice to see you here. So Azza says, I believe that each country has its unique approach to effective distribution and that different methods may be required for social investment or awareness campaigns. She says, for example, or as a new idea when it comes to home insurance, particularly in Egypt, the classification of electricity consumption segments based on the presence of electrical appliances can provide insights into the financial standing of individual households. Correct. She then asks, is it conceivable that electricity bills could incorporate details about insurance policies or offers, along with mechanisms for activating coverage? Premiums could be calculated as a percentage of the size of the appliance within the home, providing an indirect assessment of the value of the assets inside the dwelling. So I think these are great thoughts, as I would encourage you to continue along that line of thinking. But our panelists, anybody want to comment on this? And this can be for anyone. Okay. Anybody want to add? I mean, I think you know, this is a very good way forward. I think it has been done in some countries in Latin America, if I'm not mistaken. I've seen utility bills like combine the insurance and the utility bills. But Lisa, you've unmuted yourself. Perhaps you want to add something.
Yeah, I just wanted to add that it's a very innovative way of providing property insurance. Probably the challenge we'd have in the Kenyan market is the technology to do that. But of course, like once that's available, it definitely something which the insurance industry would be willing to create for their consumers.
Great. Now I see, thank you, Liza. I see Habimana has your hand raised. Are you able to unmute yourself? I don't know if you can, because this is a webinar. So perhaps if you can put your question in the chat, that would be better. Okay. So while other questions are coming in, I have a question for Bente, Kevin, and Liza. So, you know, you guys have managed to set up these wonderful partnerships with each other with like very specific products that really make sense for your slightly different ecosystems. And I think for the benefit of people on the call, I would like to ask you what challenges you might have had setting up these partnerships and how did you overcome these, thinking about what advice you might give to others, or maybe you didn't have challenges, maybe it was like completely smooth, but like what would your advice be to others on setting up these distribution partnerships? So have a think. Liza,
yeah, I can maybe start with one challenge.
Great.
Yeah. I think one of the biggest challenge we normally see in the B2B2C partnerships with affinity partners is that insurance is obviously not their core business, right? It's either a functionality or a service which is contributing towards their core business, or it is directly or indirectly contributing to their core, but usually it's really a side function, and that has a direct impact on speed. So usually I think everybody is, and Liza can add to that, but people are excited about insurance for various reasons, which we mentioned before, but I really believe that one of the biggest challenges is speed, because it is not the core business of them, but they are allowing us to really hit the right persona at the right time with the right product. So it's important for us, it's also important for them, but yeah, speed is usually one of the biggest challenges, I would say. Liza, maybe you want to add something?
Yeah, so maybe I could say that challenges, but also we found ways to work around it. So I think first of all is that you have to be cognizant that the product is different depending on the segment. So we have 2 partnerships with Bente on this mTek on this project, and they're completely different products. So the segment would have very different products, and you have to be willing to co-create as an insurer based on what the intermediary is telling you, but also what the customer is telling you. The second one is acquisition cost. So you'd find that if you're working with, for instance, kiosk, where you're using market developers who are otherwise not selling insurance on a day-to-day, then you have to find ways to incentivize them and make them sell your product. Otherwise, they'll tend to go for the person who would be giving them the best incentives. So you have to keep your product top of mind. You have to make sure that the incentives are very attractive for them to be able to push your product. And finally, I think for sustainability of any partnership, you have to show the value to both the end customer as well as to the partner on the product that you're selling. So if a customer is purchasing a product where they're not able to make claims easily and you're not able to show the claims payments, then in terms of the sustainability of that partnership, it might not be for a very long time, especially when you're looking at telcos, because they'll always want to be putting up a product which is giving value to the customer. Otherwise, then they'd replace that with something else. Yeah.
Excellent. And Kevin, would you like to add?
Just on the last point, I think it's just getting that balance, and having had underwriting experience, I have to be prudent enough not to just drive Liza's price as low as possible, because we have to have a sustainable product, and sustainable. This is a product that will last for the next 5-10 years, etc. The worst thing that would happen is that we've come into this partnership 6 months down the line, the underwriter has come back, we've revised premiums, so that just messes up the whole product, the whole experience. But I think from a tech perspective, I think one of the other challenges is the tech readiness, not only just from the underwriter space, but also whether it's the integration to government, So there's a lot. Our platforms need to speak to each other. I was in another talk, and I think that's the biggest challenge we have, I think, from a continent perspective. So Bente could create the best insurance platform, but as long as it doesn't speak to IRA, it doesn't speak to our revenue authority, it doesn't speak to Retirement Benefits Authority, you will always have, you'll always be curtailed in terms of the customer experience. So I think we still have a lot of work in terms of digitization as a country, and having our platforms speak to each other so that then the customer journeys are very, very smooth. We reduce claims, the claims experiences, etc., and bring efficiency to the whole industry. So I think that's a bigger work that we need to do as an industry in Kenya, just to make all our platforms speak to each other.
Thanks, Kevin. I just want to say that I find it really interesting that you also, from Safaricom side, you have the government very much I mean, you're aligning yourself with what the government objectives are. You mentioned that, you know, the government wants everybody to have a device to be able to access their services. And so there's a big push for everyone to upgrade their phones and be connected. So, you know, ensuring your device is not only important for small businesses, but it's also important for being a citizen and being able to function in Kenya. So I think this is very much aligning everybody's objectives, and perhaps that's also paving the way for this partnership. I'm just surmising here. Would you agree with that?
So current regime is very keen about digitizing everything. So you just aligned and the solutions around that. I think that's what you're trying to do. Yeah. So even as where we are involved, we just ensure that from an insurance perspective, what value can we add here from a wealth perspective, from a credit perspective. So that's how we are looking at it, so that we create then the ecosystem. Then other players then can come in and enjoy. Yeah.
Thank you. Right, we've got 2 more questions in the chat. So from Abdur Rashid, he says, which KPIs, so this I think is for Liza, which KPIs are you using to track progress for partnerships? And also, let's answer that one. And then I think the second one is maybe for Bente. So KPIs, Liza.
Okay, so I think for us, the first one, especially when you're looking at inclusive insurance products, is the customer reach. Then we would look at the revenue growth month to month and the impact of the marketing campaigns that you're setting up. So of course that would vary based on the marketing campaign. And then finally the claims, the number of claims that you're receiving on a monthly basis, and how that is comparing to the product pricing.
Great, thank you. So Bente, what problems are you helping kiosks to solve for them to prioritize pushing your products? Maybe this is also Liza, but Bente, do you want to have a go at answering it?
It's mainly, you see, kiosks, Lifeline is subject to open functional kiosks who are purchasing products with them. And sorry, I'm using the word kiosk in two forms here. So for open functional shops, they need to protect that. So we are basically protecting their lifeline. No open shops, no functional shops, no money to rebuild the shops in case of disaster will have a tremendous negative effect for kiosks. So it's business continuity for them to get their shops protected. So that is the problem we are solving. It's business continuity. For their own lifeline and beyond, obviously the social responsibility. Yes.
Okay, brilliant. So I think with that, I'm going to actually just draw this webinar to a little bit of a close and make sure that we finish on time. Thank you so much to all of you who've given your time on the panel and given us wonderful presentations, and also been here to answer all the questions. I would like everybody who's on the call, I'm just putting in the chat, we have a feedback survey. So again, let me just share my screen. It's always a lot of juggling. I mean, I feel like we're getting very good at using all this technology, but there's always a bit of a wait time. Okay, so as I mentioned, with each of our webinars, we do feedback surveys, which we take really, really seriously, because we want to make sure that when we do these webinars, we are giving as much value as possible. So we would really, really love to hear from you. So please go into the chat, copy this link, and please give us your feedback on the survey. We would really love to hear from you. And again, just to say that we've spoken a lot about partnerships here, and the ILO, one of the things that we do as the ILO is we produce tools such as papers where you have some really useful things that you can use in your company. So just to say again that when it comes to partnerships, and here today we've been talking specifically about distribution partnerships, but we have this paper, I put the link earlier in the chat, and we have some tools that can help you set up partnerships. And yes, So distribution being king and data being queen. Not sure about it. Yeah, I think it's really important that when you do set up these partnerships, you do it in an effective way, because it's so important, I think, for the success of these projects. We've been working with Britam, and it's one thing to design a product, but if you can't distribute it and get it out there, yeah, it's not going to help the people we want to help. So big thank you to everyone. I hope you enjoyed that, and we look forward to seeing you again soon. So with that, I'm going to end the webinar. Thank you so much.
Thank you.
Thank you.
Bye, everyone. Cheers.
Goodbye.